topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good afternoon, Los Angeles. Welcome to another Ask the Expert show where we bring you the top experts in the field of legal, health, financial, and home improvement. We have got two great shows for you today. Our first show, I don't ever warn our experts about questions that I'm going to be asking, but after his last show, and the name of his company is PB Financial Group. After his last show for the next 2 weeks, we started getting emails from other countries of people who live in the California area. And it was because he talks about hard money. And we're really going to be concentrating on that today. Let me welcome you, our expert, Poyan Rukyam. Good afternoon, Poyan.
Hi there, Steve. How are you?
Good. I like surprising you. So we talked for a few minutes before the show, but I gotta tell you, this hard money for investors is much bigger than I thought.
Yes, it is quite a big market, because there's so many uses for it. It's just not one use of somebody with the negative connotation of having bad credit. There's so many uses. Somebody could have great credit. And for example, this morning I got a call from somebody that had a home that was free and clear for $1 million. They want to buy a new property for 1.3, and they want to use the leverage on their primary residence to acquire this new property. So they called us, we worked out some numbers, and we were able to work out a structure where they don't have to come down any money. They get to keep their reserves and create a path that was not there for them with any kind of bank lender. So we provide solutions to people that are, looking for creative financing, out of the box opportunity. And that's what we provide. You want to make sure that they can achieve whatever goal that they have set forth for themselves.
Well, before we get started, tell us about PB Financial Group and what you do.
PB Financial is a California mortgage broker. We've been in the business for 17 years. We've funded over 4,000 transactions, all sorts from hard money, conventional, non-QM, bridge loans, commercial transaction, land deals, warehouses, industrial. So we've done a lot of mortgage financing. And we're very creative in the way where somebody comes to us and says, hey, this is my scenario. How can you help me? We try to give them 2-3 different ways to look at their approach. We look at it as an investor if we were in their position. And based on that, we give them a couple of different options to make a decision that will better themselves.
You've got so many different ways to help people who are looking for home loans, don't you?
Yes, we have a lot of different options for people that are in unique situations. We provide second position. We can get them line of credit. We can give them the capital that they need to either acquire or pull out cash or refinance into a new loan.
Well, before we get started, tell us, Poyan, we don't hear anything about what's going on, especially in the Palisades anymore. Nothing. I mean, we don't know if people are able to start building, if they're still clearing. Tell us what's going on with the fires.
Unfortunately, this virus, nothing happened. That's why you haven't heard anything. They're just trying to maintain and clean those lots right now. And they're talking about contamination because when you have such a massive area burned down, there's chemicals in the drywall, there's chemicals in the cars that burned down, there's the phones that melted into the ground. So there's a lot of contamination in the Palisades that they're not speaking about. And just cleaning up, before you can build, you have to have those sites cleaned up, ready to go, get plans, permits approved. There's a lot of people that are trying to sell their lots because God knows, not everybody has the same means to be able to rebuild.
Right.
And some people just want to sell their lots. And the investors who are buying those lots don't know the realistic time frame from them getting approval, being able to build a property, and then being able to actually sell it as a livable home. Because you can build it, but if there's no neighbors there, there's all this construction, will people even want to live there? So there's so many questions that are being asked and are unanswered throughout the whole industry.
What is taking so long to clean up, William?
That's a very everybody has a different opinion on that. I don't want to talk bad about government officials or uh, bureaucracies that transpire in these kinds of manners, but there's a lot of barriers that need to be crossed. But the major thing right now is cleanup. And there's an insurance, what are they covering and what they're not going to cover. So
Right.
there's so many aspects to this area. And not everybody in the Pacific Palisades is wealthy. There's a lot of people that have inherited property where it on paper it costs them $200,000-300,000, but in reality that property could be worth 2, 3, 4, 5 million. And for those people, those are the people that have been hit the hardest, and they don't know where to go, what choices they have, and whatnot. We have financed actually a couple of land loans over there that somebody inherited the property. They had no options. They needed money. So we gave them $300,000-400,000 on the property that they own free and clear. And so they can start planning their future, planning to see if they want to rebuild, what it's going to take to rebuild, or if they can go somewhere, where can they go, cover their rent for like 1 to 2
Right.
years to figure out where I don't know. I've had a lot of traumas in my life growing up here and whatnot. That's losing a property in fire is very devastating. Everything you have and don't have goes up in
Yes.
flames. It's not easy to go past that trauma to be able to just pick up and say, hey, everything I had burned down. That's not not everybody could do that. If you could do that, there's other issues of concern, but it's very difficult to go through that kind of trauma, especially if you have a family. Like, what are you going to do with your family?
We heard that insurance companies, homeowners insurance companies, are now coming back. Is that true?
They technically never left. It's just their premiums have increased so much over the last. I own quite a bit of properties, and over the last 2 months, I've had about 7, 8 different cancellations from different carriers saying that it's so costly to be in California. Every property like a 2,000-3,000 square foot home, when it sells for $3 million, well, the insurance has it covered if something happens, and the premiums just don't justify it. In another state, a premium for that kind of home that's valued around $600,000-700,000 is $1,800 to $2,000, right? But it's covering only like $600,000 worth of insurance. But you can't expect that same amount to cover a $3 million home, even though they are the same square footage. The cost to these insurance companies is significant. And unfortunately, our government, in a way, has not helped out the insurance company to alleviate some of the uh, debts that come along with the coverage.
Are people taking a big loss that are selling their land?
Not really, because the majority of them had insurance and they were able to pay off their mortgage, and then they would have the land free and clear. And there are quite a bit of land opportunities out there, but there's questions about when you can build, how long it's going to take you to get the plans and permits, and then actually be able to build out. I do a lot of ADU construction in LA, and labor is tough. So imagine all these uh, contractors ready to build these projects, and all of a sudden there's going to be literally no workers that can build these homes.
Oh, that's right. We don't think about that, do we?
No, all that is going to come by and bite us in the butt. And also, we have the Olympics that are coming to Los Angeles in the next few years,
That's
and
right.
we're gonna have a shortage of housing in Los Angeles because of that.
Gosh, there's things we'd never even think about. I love doing the show with you because you always enlighten us. And I never even thought about that with the Olympics coming there. Yeah, I want everybody to know you do every type of mortgage out there. But today we're going to really concentrate on hard money, if that's okay. Um, what, when you're considering hard money mortgages, investors, what should some of the questions they should ask?
The questions are going to pertain to their ultimate goals. When somebody's looking to get any kind of mortgage, maybe a conventional non-QM hard money loan, you should have your ultimate goal for the property of what you're going to do with it. Are you going to live in it? Are you going to rent it out? Are you going to fix it and flip it? So depending on what your ultimate goal is, your questions should pertain to that objective. For investors, for example, they should understand what their cost is going to be going into the loan, what their rate are, how long do they need to be in this loan before they can get a conventional bank loan to pay that off and reduce their mortgage payment. Will the loan cover the mortgage payment? If not, how much more out of their pocket they have to come in every month to cover those mortgage payments until the property is rented, rehabbed, and all the work is done for it to be an investable transaction for them.
So they should really understand interest rates and fees when they're going into this hard money mortgage.
In any kind of mortgage that you go into, knowing the math is 95% of it. If you don't know the math, don't just be like, okay, I'll figure it out later. No, you need to figure out right there and then. I know a lot of people are scared with the math of big purchases like a car purchase or a home purchase, and they just agree to whatever that's put in front of them. But they should look at their income. They should look at their mortgage payment. They should look at the property taxes. They should look at the insurance that it's going to cost them. Add them up. Add up the utilities that you think you're going to have to pay for the property, and be within your limits of what you're making. You don't want your back against the wall. I've acquired a lot of properties from the banks over the years, and I see sometimes people lose their property within like 6 months of them acquiring it. And I'm like,
wow,
who helped these people obtain that mortgage? Who is looking at these loan documents when they signed it? Why put your whole family of having to move into a place and then being foreclosed on? That those things need to be talked about way beforehand, and a lot of agents, unfortunately, like real estate agents, they just want to put people in escrow. They want to, they want to earn their commission checks and stuff, and they don't vet the borrowers to be like, hey, this is a good deal. Sometimes you got to say no to people. Unfortunately, you don't make enough money for this property. You shouldn't buy it.
Right.
Wait another 5 years if you have to better yourself, put more money, get a better job, work harder, and maybe move up in the company to better your situation, better your life.
It's here in Florida, the homeowners and the condo association owners, we get so many people. We've got some very big shows that we do, and we get letters all the time how the realtor didn't explain the association fees to them properly. And a lot of it, they were just shocked on how much it was due because the realtor didn't explain it right.
That happens a lot. Real estate agents, they're not buying it. They don't have to make the mortgage payment. They just put it on the borrower and say, "Hey, you're buying it. You're responsible." There is something called a questionnaire that's ordered when a transaction is conducted, refinances or on a purchase transaction, and people need to look at those items because there's a lot of things such as like a special supplement that comes up or an assessment that the HOA can implement that would
Yes.
all of a sudden cost you $5,000 to $20,000 depending on what that work it could be. And you also have to always make sure that your association that you're in has enough reserves to cover emergencies. Because what are they
Yes.
going to do? If the roof goes out and units are damaged, they're responsible for the common areas and the health of an HOA, a health of an apartment building, like a building. And the thing about investment apartment buildings and multi-unit properties, the owner is usually able to get in and be like, okay, I have money that I can cover these expenses, right? But with a HOA, because it is divided amongst so many people, the breakdown for any special assessment or an emergency can put the bill on a few people that can afford it, and the people that can't all of a sudden are not able to make their mortgage payments. They're not able to make their HOA payments, and it puts them against the wall. And the problem with Florida is it's more of a retirement community, and
Yes.
some people really have means. They have social security, they have pensions that are very limited. They're not going to increase even though we have inflation and other costs associated with life. Those things are just going to go up, but the income that you're bringing in is going to be very limited and it won't be increasing. So these are things that people should be aware of and be able to do something about and know going into acquiring a condo.
We just got a text. This is probably the best text I've ever seen. This is from John in Malibu. He said, I love listening to your shows, especially this show. This show makes me want to go out and buy a house and hire this mortgage lender the way he explains everything. That is really nice. He said, my question is what is loan to value ratio? Can you explain that to me?
Loan to value is basically the loan that you're getting versus the equity that you have against the property. So if you have a property that's worth $1 million and you want to borrow $600,000, that would be a 60% loan to value, meaning that loan to value is the percentage of loan against the value of your property.
Well, you probably get so many calls during the day. What are most of the calls coming into your office? What kind of questions do people have?
We have all sorts of people call our office. Even a lot of mortgage brokers call our office to ask questions
Mm,
about hard money. I feel like majority of the time we're in the business of educating people, which is something that I love doing. Knowledge
It's
is power.
obvious.
And if we're getting those calls, it gives me that honor of answering those questions and being helpful to people. Even if I don't get business, I'm privileged enough that one deal, two deals here and there is not going to break me. It's not going to put me in any kind of situation. So to be able to educate people and for them to remember us as that individual or company that was able to answer their questions and guide them, even though we might not be able to help them, that's a privilege. That's a blessing because they trust in our opinion, and they make actions based on our opinion. We are not a financial advisor. We don't try to give financial advice to anybody, but we talk about a personal growth and personal experience and give people our honest 2 cents to make the best possible decisions for themselves.
Jason in Beverly Hills, listening to the show. I'm really enjoying your expert. Does he see rates going down in the near future?
People would hope or wish that I'm going to come and say, yes, I believe rates are going to go down. I would love to see rates go down. It's the benefit of everybody for rates to go down. But the reality is, based on the economic numbers and what the Fed wants to achieve in the short and long term, and the inflation that we continuously see, and the employment numbers that we see, the American public doesn't really need a hand-me-out right now. So based on that, I don't believe rates are going to drastically decrease. I think if anything, they might stabilize, they might go down a little bit, but in the long term, unless we go into a recession or depression, I don't see the government giving us another quantitative easing to reduce interest rates.
Your show goes by so fast. Tell people how they can reach your office.
You can email me directly at pouyan@hardmoney.com, or you can contact the phone number at 877-700-3703. You can speak to me or any of the account executive or mortgage officers in my office. I will be more than happy to help you out.
What about your website? You do have a website, I know.
Yes, our website is calhardmoney.com. CALHARDMONEY.com.
And we will be replaying the show again next week. The show is so important to us that we replay it after the live show. And Pouyan will also be back again with us next month. Hey, I love having you on. The way you explain everything, you've just got this calming voice about you, Pouyan.
Thank you so much, Steve. It's always a pleasure to be on your show. Thank you for having me.
We love having you on your show. We're going to go to break. We come back. We've got our next show, our next expert.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.